You announced your earnings yesterday, and of course you announced a profit rise of 67%, and in spite of cost increases and trading volume decline, and you announced a return on equity of 12% versus 4% last year. But nevertheless, you didn't meet the street's expectations for the first time in, 15 or 16 quarters. I wonder if you'd comment.
So I'm thrilled. So thank you very much for the introduction. I'm thrilled to be here. And I will answer any questions as honestly as I can. First of all, the Wall Street estimates are what 20 people think are estimates. They're smart people. They're not smart people. I call them the smart, dumb average. I really don't care what their estimates are. They don't update them. They're not sure. People go on vacation last part of December. So, I look at and then, of course, there's too much focus in the short term. I mean, I look at, what's important to me? Market share, number of clients, products and services, new branches, not NIM, and whether expenses are a little higher or lower that quarter. And we can't forecast trading any more than anyone else in this room can. So I tell you, let's just stop asking. It'll be what it is. It's episodic. It's volatile. You have a great trading business. I'm proud.
But it was interesting that you took a larger loan loss provision.
Yeah.
And I'm wondering what message you're sending to the market. What do you think that portends?
Well, that's because when the loan book grows, we put up loan loss reserves. So it was really because of growth, and mostly relating to consumer stuff. But if you look at actual credit, actual losses in middle market, large loans, small business, mortgage, auto, credit card, it is very good. If you look at it historically, it's in really the best 10% it's ever been. And therefore, it has to get worse. And part of that's because, we've been through all these tough times. And so over time, eventually, it will normalize. We actually show our shareholders what normal would be. And normal is quite a bit higher than it is today. So it's really good. Consumers in very good shape. Their balance sheet's in very good shape. More people coming back to the workforce. Wages are going up. Consumer confidence, was down here. And, it's off the high, but it's still at quite a high number. Business confidence is still at quite a high number. Small business confidence is still at quite a high number. So the actual underlying stuff is much better than the noise you read about when you read the paper every day.
So what does worry you? Is it fintech? Is it competition? Is it geopolitics? What is it?
Well, look, we analyze things. We do business in over 100 countries around the world, so we have to be very, very careful. And it's not. I tell people, it's not you take risk, you mitigate risk while serving a client. So we have to serve clients and then make sure we manage the risk. So the job is always to serve those clients. We do it around the world. And geopolitical risk is always there. It may be a little heightened today because of Iran, North Korea, multiple wars in the Middle East, et cetera, Brexit, trade policy, China. So those, obviously you should worry about those things, but we don't actually make a lot of businesses around that. The thing, and obviously, I know you had the Fed governors here and coming here soon, and Fed policy obviously has a little bit of consternation out there. But what I worry about most today is bad policy. Just bad policy, that we don't get things done that this country desperately needs, like immigration reform. I think we need to get a good trade deal. I think there are legitimate complaints about China. And, we got Japan and Europe are kind of with us in that we should fix it. I think China wants to fix it. I'm a little hopeful we get that kind of done. We got to get kids back to jobs. We got to get, we have the community college. Jennifer Robb is here, but we have in these community colleges, I think there's 500,000 kids who go to CUNY, between the community school, and 16 or 20% graduate. Okay, I look at that and say, we have these huge institutions that aren't doing enough for the outcome, which is kids with good paying jobs. And it can all be fixed. So I worry mostly about our own public policy. And the government shutdown, I put in the same category. It's kind of another self-inflicted wound. I'm not blaming Democrats or Republicans. It just isn't the way to run a railroad.
So what would be your recommendation? Just get back to work, or
look,
the shutdown's an immediate problem.
Yeah, when you look around the world and you look at governments and businesses that are successful, they usually collaborate. They understand that you need business. Business generates jobs and capital investments and productivity. Business should be civic-minded and community-minded. But, it's not going to work if you fight all the time. It's true for Democrats and Republicans. When the democracy was formed, that meant you compromise. That's what a democracy is. You can't have a democracy where you refuse to compromise. That's where you go someplace and you sort out your differences and you figure out where you're going to build the railroad tracks, where you're going to build the school, and how you're going to take care of your citizens. So, at one point, we've got to get back to regular government.
You mentioned yesterday, I think, that if the shutdown were to last much longer, it could portend zero growth for the first quarter. How much longer does the shutdown have to continue for growth to really suffer?
What I was referring to was an economist who said if it lasts for the whole quarter, it could reverse the growth of the quarter, which might have been 2 to 2.5. It could be zero. And I don't know that. It's really hard to figure out what the shutdown does to the economy. And also, there'll be a little bit of a bounce back after that. So that's just the effect in the quarter. Remember, a lot of these people are not being paid, are going to be paid. They're just going to be paid kind of late and painfully. And but it is a negative. Sentiment does matter in business. And, so the more we create negative sentiment, the worse it is. And, I hope there's a deal to be done. Give the president money for border security. I don't care whether you call it a wall or a fence or whatever. And then do something in DACA or merit-based immigration, which we need anyway, and almost every citizen is for.